Hello, everybody. It is Michael here from My Retirement Trading, and I just had the pleasure of interviewing John Greathouse from Retire on Dividends and Covered Calls. And it was an amazing interview, and I cannot wait to share it with you all. So let's get into it. Hello, everybody. It is Michael here from My Retirement Trading, and today we have a very special guest. But before we get into this, I must state that none of this is financial advice or a recommendation, and it is for entertainment purposes only. With that being said, let's welcome our guest, a finance YouTuber with over 26,000 subscribers, and his channel is Retire on Dividends and Covered Calls. Let's welcome to the channel, John Greathouse.
Yay. Thank you very much, brother.
Yeah, welcome to the channel. John, introduce yourself to everybody and tell them a little bit about yourself and how you got into investing and what was your first purchase.
Well, first of all, I want to say thank you for inviting me. What people may or may not know is that you and I have been on Facebook together, and over the years, you've watched some of my videos. I remember when you started your channel. That's how you and I actually kind of became internet friends, right? YouTube friends. Love your videos, love your content and your passion. I love it. Been watching literally for years. How I got started, I've been a trader, day trader, swing trader, many years ago, and I really thought that was going to be the way that I maybe found my way, got rich. Well, found out real quick that I wasn't that good. And over the years, I've learned how to invest, dividend invest, and sell premium, writing covered calls and selling cash secure puts. That's sort of my wheelhouse. And for over 10 years, I abandoned every investment strategy except for cover call writing and cash secure put selling. To me, that is the absolute golden goose of investing. Because when we buy a stock and then we give somebody the right, but not the obligation to take that stock away from us, we're paid a premium, an upfront premium. So for the most part, we dictate the terms. And I have had so much success with that over the years. And I got on YouTube. My mentor, Jerry, who I talk about so much, he literally showed me the way. I was a frustrated day trader, swing trader, wasn't getting ahead. He taught me how he funded his retirement. And he did it with selling premium, writing covered calls and puts. And I learned it. I took it in like a sponge, man, because as soon as I did my very first trade, I had success, whereas before I didn't. And selling premium, writing covered calls and selling puts, it's very conservative and it's very profitable. So from that, I created a YouTube channel, and I actually created a video to show Jerry. Jerry and I would talk at the gym, and he was mentoring me, and he was teaching me how to sell premium, write covered calls. And I did a video for him, and I sent him a link. And little did I know that video would go out to the greater internet. And next thing you know, other people like yourself wanted to hear my story. They wanted to hear the trades that I did, because all I did was show you my trade, talked about it, so maybe you learn something. I'm not an expert at this then. I'm a little bit closer now, but you're never that good, because the market can absolutely whipsaw, and it's a very frustrating thing. But slowly but surely, I started to learn the strategy and more success. But literally, I had like a 95% win rate early on. So 10 years ago, I started with one stock, and that was PSX. Real quick, Barry and I had talked about selling premium. We were talking about writing covered calls and selling puts. And I was apprehensive. I was scared. I didn't want to mess up. We're talking options. But when you sell options, you sell the right, not the obligation, to somebody else to take your shares. It's a much different options game. Of 3 outcomes, you win 2 of them. So I loved those odds. I had PSX and I was going to sell it. And Jerry said, "No, you're not going to sell it. We're going to write a covered call." And I'll never forget. Now, mind you, I day trade, swing trade. I was in the dot-com boom and bust. I remember that when I put on that cover call trade, I felt the trade. And for anybody that trades out there, you may or may not get this, but that trade, it was as if that trade was supposed to be the seed for which would grow this success to where now I went from one stock to now I do 66 trades in October, 43 trades in November. I have 650 YouTube videos, 26,000 subscribers, over 1.5 million YouTube views. And in fact, this year, I beat my last year all-time high selling premium over 400,000. So I've had great success keeping it simple with one strategy: writing covered calls and selling cash secure puts, the golden goose of investing, because with that trade produces the golden egg, covered call premium. We take that covered call premium and buy a dividend paying fund, passive income. This strategy has allowed me to retire at 55. I retired December 22, and I left my 30-year 9 to 5 and literally stepped right in here to the captain's chair, and I trade professional. Here's what I do. So hope I answered your question. I think you like that story. You may have heard that story before.
Oh yeah, definitely. I definitely used to watch you all the time when I was learning how to trade options myself, and you cleared up a lot of things for me back in the day. So yeah, I appreciate it. So how you said you buy dividend paying stocks? Is that like covered call ETFs or?
Well, I've been trading and investing in the stock market since the late 90s. So I own everything from, well, I used to own muni bonds, which would pay a fixed rate. They were tax advantaged, so they were really good. Then closed end funds. I own quite a few closed end funds. Some of those closed end funds would be covered call writing funds, and then uh, I started, investing in the newer high yielding dividend paying funds. Uh, I like to use indexes when it comes to both my dividend paying funds and my the stocks and ETFs I use when I write covered calls and sell puts. One thing I'm going to tell you: over the past 10 years, I have crashed and burned in this game so many times. And what I've done is I've stood up, got back up, and said, "Look, the bills don't stop. The bills don't stop. So I have to learn this." And what we're going to do is learn from our mistakes. And I slowly started to craft this method, my methods that I use today. I narrow everything down to using indexes, sectors, and the Mag 7. I hate single stock risk. I know a lot of people out there love single stocks. They love their hoodie and they love their Palantir and all this. But what I'll tell you is single stocks will let you down. Eventually, they will let you down. And only the cream rises to the top. See, I'll give you a quick story. Probably about 10 years ago, I invested in Win, traded Win, made a lot of money with Win. Then one day we woke up when Wynn was trading for $210 and the founder and CEO was doing things he shouldn't have. Stock fell from 210 down to $80 a share. I'll never forget watching on YouTube. There was a great YouTuber. He said, "These are the 3 stocks you never sell." Yeah, I bought one of those stocks. It was trading for 250. It got as low as 80. So single stocks will break your heart. Now, granted, I know, and I tip my hat to some of you that have actually ridden stocks like Apple and Nvidia up. I'd love you, tip my hat. But for most people, that don't happen. Indexes give us an opportunity to be diversified, and indexes, quite frankly, in my opinion, they always come back. We had a crash of 21% this year in the stock market. And hey, a lot of those big stocks did come back. They're momentum stocks. That's why they came back. Wall Street feeds on momentum. But it was the indexes that came back and rallied much higher. I'd rather ride an index stock or a sector stock like the pharmaceuticals or semiconductors or the regional banks. I love the regional banks. Than hitching my wagon to, let's say, a single stock like MicroStrategies, right? SMCI, things that will break your heart. So at the end of the day, my strategy is simple: indexes. And when I use dividend paying funds, I tell you what, a lot of your investor viewers today invested in a lot of these high yielding dividend paying funds of single stocks. And you're heartbroken as we sit here today. I know this. I know this because I invested in them all. And you know who I'm talking about. The single stock ETFs, covered call ETFs, that broke everybody's heart. They opened up at 20, paid these fat dividends, and now they're reverse splitting. And total return, total return. Yet your portfolio is sinking. And you say to yourself, well, I drip invest. Well, if you drip invest, then you're not going to be able to retire. See, when I retired at 55, I turned off all the drip. And as my portfolio starts to sink, you realize real quick that single stock risk, you got to avoid it. So I got involved in all the index-based ones, the ones that for the most part don't Navi road as much. XDTE, QDTE, RDTE. Those are just 3. I got 15 of them, and all of those form the basis of my passive income monthly. So do I have favorites? I do. Indexes, Russell, NASDAQ, and the S&P.
So, what is your favorite index? The actual index?
Well, my favorite index actually is the Russell 2000. The Russell 2000 right now, I believe is undervalued in my opinion. I trade 3x leveraged ETFs, and one of them is TNA. And TNA is an awesome covered call and cash secure put trading vehicle. 3x leverage, and it's the indexes. And one thing that I do, I actually have a membership. I have a business that revolves around all of this. And one of the things that I do, I have a video library because I do so many videos and educational videos that are exclusive to the members. I always have charting classroom. And what I told you earlier that I have methods and I have narrowed down my trading to where I get rid of the noise and the fluff. And what we do is we stick to a plan and we execute the plan. Part of that plan is that we have some golden guidelines that I use. And part of that is watching the charts, Keltner channel, RSI. We get involved at the bottom of the range. So many people get involved at the top of the range, and then they are left holding the bag when the markets sell off. See, I've been in this game so long, I believe that. There's so much money in the stock market. The only place you could truly make true wealth is in the stock market. Are you going to go out and buy a house for $1 million and maybe make some rental income? I doubt it. Not with the rule change of 2007. Are you going to create a business? Maybe you will. The stock market allows the small ball player like you and me to start investing, understanding investing, creating passive income with dividend paying funds, creating wealth. So at the end of the day, when you learn the fundamentals of great entry points when you make your purchases and things like taking those profits, remember the golden goose produces the golden egg? You take that golden egg and you're disciplined and you buy a dividend paying fund, a dividend paying fund that is passive. All my bills are paid with my passive income. So at the end of the day, that's where you need to be. Whoever you are, you need to create passive income because that is the lifeblood of any retirement. Because what I'm going to tell you is this: when I walked out of the 9 to 5, there was no 9 to 5 rope anymore. When I was done, collected my last paycheck, it was on me. Now, at the end of the day, we all sell time. That's all we're doing. We talk about the stock market and we buy dividend paying funds and I trade the market with options. What are we doing in life? We're selling time. You sell time at the 9 to 5 and they pay you. I sell time by writing covered calls and selling puts. They pay me. What happens is with a lot of these dividend fund investors that you see on YouTube and everybody has bought into, they buy time. See, when you go to the 9 to 5, you're selling your time and you're getting paid. You get that, right? When I sell covered calls and write puts, I sell time to the call buyer to take my shares. I get paid. When you buy a dividend paying fund, you become someone that buys time. You put your money up and you hope and pray that they're going to produce a dividend. Not a fixed dividend, by the way. Dividends fluctuate in today's game. Well, I would rather sell time because I'm on that side of the fence, generating cash flow, dictating my own future, building my own wealth, getting better. And then with my profits, I buy time. And I just let that percolate, let that grow. That's what I try to teach all my members and my YouTube videos today that I post. I show you my trade, we talk about it. So maybe you learn something. But more importantly, I always give a little bit of commentary in my videos. People want me to shut up. They always tell me, look, you talk too much, get to the point. Well, what I'm going to tell you is this: if you cannot spend the time to listen to like somebody like me and Michael, then you're not cut out for this. You're just not. I've seen so many people crash and burn the TikTok culture. You don't want to hear it. I put together a 15-minute video. You watch that video, you absolutely get better. The point to all that is change your mindset. I want you to change your mindset that the stock market is going to be the place, if you get good with experience, right? Education, patience, and a good strategy, you can prosper. You can absolutely find financial freedom. Problem is, most people are impatient, they don't listen, and they take tips. I don't take tips. You give me a tip right now, I'm going to tip my hat to you and say, good luck. And then I'm going to go and do what I do. People who chase tips go broke. Jesse Livermore. Jesse Livermore is the greatest investor, stock trader you've never heard of. Now he made $150 million on the day the stock market crashed in 1929. Now he died broke and he committed suicide. But when Jesse Livermore was the best in the world, do you know that one of his golden rules is to never take a tip from anybody? And there's a reason for that, because you got to rely on somebody to give a tip, get the tip, and then ultimately to exit the trade from the tip giver, out of your control. What I'll tell you is this: keep it simple. Keep it simple. And when you keep it simple, you'll have success.
So, you definitely prefer writing your own options versus just taking all your money and just buying index-based covered call ETFs.
Absolutely. It's more profitable. At the end of the day, I made 8% last month. October, I made 13%. Cash on cash, man. Cash on the table. I place my trades with writing covered calls and selling puts. And when I'm at the end of the month, 13% more than what I had before. Last month was 8% more than what I started with. Look, at the end of the day, I get it. There's a learning curve with selling premium. That's why every single video I do is showing you my trade, talking about it, so maybe you learn something. My dad showed me how to change the front brakes of a car. Now, this is in the 80s, and he used to get a job, side job, and we would do that side job in the driveway. He would let me watch, and that's what he would say. I want you to watch. And I watched, and I watched. Through watching him, talking to him, I learned how to change those front brakes, and I did. Through my videos, I show you my trades, and that's it. I don't make any promises. I don't tell you you can retire on Alti and all these garbage videos. In fact, I make fun of them. If you go to my channel, I've made fun of people that put together videos for YouTube money. The problem is there's a lot of noise out there. There's a lot of people doing videos. At the end of the day, I bet you there's hundreds of them uploaded today about all the high yielding dividend paying funds. What I want to do is narrow it down, keep it simple. Now, you ask the question, why don't I just buy ETFs and have them do it? Again, I'm buying time. When you buy time, you're never paid as much as when you sell time. See, that's how I see it. All we do is sell time. We sell, sell, sell. I tell every single member, everybody on my YouTube, we sell, sell, sell time. You, the dividend investor, you buy time. And when you buy time, you're not in control. And as we see, and as we have seen, these dividend paying funds did nothing but go down, down, and down. So what happens is you feel like the frog in the slowly boiling water. You have no control. You're in that slowly boiling water. And eventually, you know what happens. That's where a lot of people are with these high yielding dividend paying funds. They started out with X amount of money. Now they've seen their portfolios fall some 70 and 80%. Now they'll tell you total return. I'll tell you what, the investing game, right? The investing game should not be, I give one of these companies my money, and then 3 years later, 3 years later, I might have all the shares for free. And I don't know what price it's going to be. And with all these reverse splits, I don't even know how many shares I'll have. But that's exactly what's happening when you drip invest, because these things keep going down and down and down. A couple things happen. You don't have control. So you feel helpless. I'll tell you what, man, no successful trader wins when they feel helpless. They're in control. I'll tell you what, that's the problem with these high yielding dividend paying funds. You give them your money, and basically they hand it back to you 3 years from now, return of capital. Now, oh, by the way, I'm talking the return of capital, not from a tax standpoint. I'm talking about literally handing these people your money, and through NAV erosion, this thing has gone from $20 to $4. And all you hope, at this point, you hope. You're in the hope and pray game. You're holding on to the hope rope. And quite frankly, you might even be embarrassed. You're disappointed. You're embarrassed. You made a bad decision, or at least you think you did. I'm telling you, learn how to sell premium. Get out of that game. Take your covered call premium profit and buy that stuff. That's what I do. People say, John, why do you buy the dividend paying funds that you criticize if you're making so much money? At the end of the day, you need passive income because I know how to do this, right? I know how to do this. My family doesn't know how to do this. I've taught all my kids and my kids trade, but I do this. So I want to have a legacy. And that legacy is, as I sell premium, I always put money towards dividend paying funds. So they always have income. So to answer that question, which I recently have had to answer that question a couple times because I just did a video where I criticized some of this stuff. Hey, you had premium profit after you pay the tax man, premium profit free. It's there. It's in your hand. What do you do with it? You could roll it back in your account, do bigger cover calls, bigger puts, or you take a portion of that and put it into a passive income fund. And by the way, there's a lot of good ones out there that don't navvy road to nothing. And you just collect passive income on the side. What happens if I get sick? What happens if something happens to me and there's no passive income? Well, all of the things that I worked for, of course, it goes away, right? So passive income, absolutely. Just do it right. But what I'm going to tell you is learn covered calls and cash secure puts so you can generate income, you can generate cash flow.
So, what are your 3 favorite ETFs to trade your options on?
So it's funny. I don't think I actually answer your question last. First of all, I'll answer that question. My favorite dividend paying fund right now, I actually like RDTE. I believe that's Defiance. That's a good one. It's a Russell 2000 product. I actually like that. I like XDTE. Pays a very nice dividend. These pay about $1 a month with minimal NAV erosion. I know there is NAV erosion. I get that too, but at the end of the day, it's not as much. It's not as pronounced. And with the markets going higher, right, and the strategy they use to derive that dividend, you don't get growth as much, which I'm good with because I want the cash flow, but you don't get the horrible single stock NAV erosion that has broken people. Now, in terms of writing cover calls, selling cash secure puts, now I do something not different, but I do something that most people don't like. I use leveraged ETFs. And the reason for that is because over the years, you have to understand, over the years, I don't equate volatility with risk. A lot of people do. A lot of people equate volatility with risk. They will trade the SPY all day long. All day long, they'll trade the SPY. You've heard of the SPY. Everybody trades the SPY. I tell them I trade UPRO. And they say, oh my gosh, UPRO, my gosh, it's so volatile, so risky. What is UPRO? UPRO is a 3x leverage ETF to SPY. Once I realized that volatility does not equal risk, I was able to use every single index, every single sector. Semiconductors. I don't use the SOXX. I don't even know the name of it. That's the 1X leveraged ETF, 1X to the semiconductors. I use the 3X leveraged ETF, SOXL. So I use leveraged ETFs to sell premium. And over the years, people will say they're depreciating assets. They don't rally this, that, and the other. And what people miss is that when you sell premium like we do, where we get a fixed return. I did a trade today. Let me tell you what I did today. SOXL, the 3X leverage ETF to the semiconductors. So there's 10 semiconductor or more, 10 semiconductor stocks in the ETF, right? So it's leveraged 3X. So if you went out and looked at the 1X, it's gonna pay you, let's say, um, 30 cents for a 1 week covered call. I don't know, out of the money. Just saying. Well, with the 3X leverage ETF, you get 90 cents, right? So these are great selling premium vehicles, investments. So what I love to do is this. We use leveraged ETFs, SOXL, right before I got done with the trading day today. Had about 45,000. Went ahead on 1,000 shares. I bought SOXL. We'll keep the number straight, okay? Just to keep the number straight. Bought the shares at 45, okay? Bought the shares at 45. I gave somebody the right, but not the obligation, to take those shares away from me at 42. Now, when they paid me the premium, right, for me to hold these shares for the time frame, which is next Friday, they had to pay me a per share premium. Now, I'm giving my shares away cheaper than I bought them. So if you understand options, and I hope you do, because if you're out there investing in dividend paying funds that use covered calls to derive your dividend, I hope you understand how they derive their dividend. This is what I'm talking about. A lot of people don't. I got $4 for that trade. Now do the math. I bought them at 45. I'm giving them away at 42. That's a $3 difference, intrinsic value, right? There's intrinsic value in that option. And I got a $1 premium. So for the time frame, right, basically a week and a day, I collect $1,000 on $4,500 invested. Now, if you do the math on that, I mean, roughly, is that something like 2.6%? Something like that? What that trade does, it puts cash flow in my wallet right now, $1,000 in my wallet. Now, if I let that trade go to December 12th, next week, if it stays above 42, they're going to take my shares. The market maker is obligated to give the call buyer, whoever that is, my shares at 42. I've given myself over $3 of downside protection. And right now, SOXL is trading higher in the range. It's going to peel back. This is what I teach the members. Chart reading. It's going to peel back. And it's probably going to peel back to 43, 42. That's my take by next week, if it peels back. I give myself downside protection. It goes above, moves higher. I have my shares taken away. I collect $1,000 in premium, a 2.6% in 6 trading days. That's how we're able to generate incredible amounts of profits, absolutely beating any high yielding dividend paying investor.
So, I got one final question that I always ask everybody, or try to anyway. What do you think about Bitcoin, and are you bullish on it?
Well, I trade Bitcoin via BitX. So to me, Bitcoin is nothing more than a momentum trade. It's a commodity. You ask me, it'll never be a currency. I mean, yeah, you can buy some stuff here and there, but it'll never be a currency. So my mindset is it'll never be a currency. It is a momentum trade. And to me, I trade it like a commodity. And it's very volatile. It's very volatile. I have listened to the book 1929. I'm listening to it again. 1929. It's a great book. It's about the stock market crash of 1929. Do you know the stock market in 1928 rallied 68%? Very volatile. Very volatile. Doesn't that kind of sound like something today? Bitcoin, for which Bitcoin can move in these incredible clips. You know, back in 1928, the stock market was probably 20 years, 30 years. It was new. Not many investments. Very volatile. And as the overall stock market that we know today matures, volatility starts to come more steady. Bitcoin will find itself more steady. Bitcoin is a store of equity. It's a store of value. There's only 21 million coins ever to be printed. 75% of the coins, I believe, are not mined, lost, not traded. 75% of this Bitcoin is just sitting on the sidelines. Scarcity has Bitcoin moving volatile. So big momentum swings can happen like we see now. So because of its scarcity, Bitcoin inevitably will go higher. So what do? I trade Bitcoin via BitX, which is a leveraged ETF, a 2x leveraged ETF to Bitcoin, and I sell covered calls against it. That's what I do. I don't trade Bitcoin. Bitcoin's nothing more than a momentum trade. And who's going to pay $95,000 a coin and pay Coinbase all the fees that in and out of trades? Very expensive. And you got to have a lot. Trade the ETFs they've created. I use BitX. I do it for covered call premium. You can get incredible covered call premium, and that's what I do. So I've traded BitX. I think last year alone, I made 83,000 trading BitX because Bitcoin has a trading range. Bitcoin is no different than anything else. It has a trading range. When you identify the range, you get involved low in the range, and then you trade it. And the way we trade it is covered calls and cash secure puts. That's what we do. And that's what I show my members. And that's exactly what I do, man. I come back to this desk every single day. I'm as much of a professional stock trader as anyone because this is what I do for three hours a day, generating my living. I have my business from it, creating content, creating guides, writing books. I mean, right now I'm putting the finishing touches on what will be the Poor Man's Covered Call Masterclass, where I have done and experienced literally everything with the Poor Man's Covered Call. And there are so many things about the Poor Man's Covered Call that nobody talks about on YouTube because it's boring and it takes a lot of time. But you know what? At the end of the day, you can use less capital, control more shares, and write near-term covered calls, generating the kind of cash flow I'm talking about. And that is what I do. And quite frankly, I love it. So yes, I'm bullish. I'm bullish on Bitcoin, but I'll finish on this note. Absolutely am bullish on the stock market, largely because there's too much money out there. And remember the premise, the entire premise of mine is that you're not going to get rich with real estate. You're not going to get rich with a business. You're just not. A very small percentage. But you can have success in the stock. There's so much money in the market. So much money in the market. I think it's geared to go higher forever. So with that said, stay in the market. If you're an investor, if you're just a straight investor, buy your great stocks with your dividend payers. Time in the market is what makes you wealthy. If you're a dividend fund investor, try to find these dividend paying funds that are index based because single stock risk has wrecked people and inevitably it will wreck you. There are so many stocks out there that people loved and they are wrecked now. Indexes go higher. And if you're going to write covered calls and sell puts, what I'll tell you is this: it's very profitable, very conservative, and you can generate real cash flow in retirement. So if you're looking for cash flow in retirement, learn the covered call and cash secure put strategy. It's very conservative and it's very profitable as well. Hey, whether you use leveraged ETFs or you use some of the greatest stocks in the world, when you write covered calls and sell puts, they pay you that upfront premium. Even companies like Bristol Myers, Merck, Chevron, you can generate 3% monthly. And that's a pretty good return, beating the stock market hands down. And hey, look, I want to say thank you to you for having me on your channel. And I wish you the best of success. I see your channel's growing and absolutely love it, my man.
So where can people find out more about you? You got to,
Yeah. So if if you're on YouTube, you just type in retire on dividends and covered calls. There's other people out there called retire on dividends. I'm the guy that does covered calls. So retire on dividends and covered call. And I have a website, core position trading, CPT dashboard, CPT dashboard.com.
so yeah, I'd like to thank you for coming on the channel, and everybody take a look at reach out and look at John's website and his YouTube page. And on that note, until next time, catch you all later.